Hello, Ditfeeders. You're watching a recap of the American session on March 2 as US markets are very sensitive to geopolitical factors. However, investors do not neglect macroeconomic data, statistics, and other related news that could influence market sentiment on Forex and the stock market. All major US stock indexes closed in the red yesterday. The Dow Jones closed 1.8% down. The Nasdaq and the S&P500 lost 1.6% each. The US equity market was bruised by the ongoing hostilities in Ukraine. In response to Russia's invasion of Ukraine, the West imposed severe sanctions against the Kremlin. A lot of foreign companies are terminating the cooperation with the Russian partners. The political standoff between Russia and the West is sure to leave an imprint on the Russian economy and global markets. A selling wave on Wall Street yesterday confirms this dismal outlook. Today, the S&P is trading at nearly 4,310 inside the corridor between 4,260 and 4,360 points. Notably, downturn in the US stock market is unfolding on the back of upbeat reports on the US economy, so construction spending in the US jumped by 1.3% in January. Besides, home building activity is currently 35.5% stronger than the peak of February 2020. The ISM manufacturing PMI rose to 58.6 points in February, and durable goods orders increased to 61.7 points. And today, the ADP payroll processor reported that the US private sector added 475,000 jobs last month, following a contraction of 301,000 jobs in January. At the same time, runaway inflation is still raging across the country. Nevertheless, the outlook for the US economy is optimistic. Meanwhile, stock investors are alarmed despite upbeat macroeconomic data. The US dollar remains the most popular safe haven asset for about a week due to escalating geopolitical tensions in East Ukraine. Yesterday, the US dollar index spiked to the highest level of the year amid the weak euro. Now the index is still trading at its highs of nearly 97.58. It's expected to trade in the corridor between 97.10 and 97.70. Perhaps the speech by Jerome Powell later today will clear up market sentiment on the US dollar. Will investors spooked by the Russia-Ukraine crisis take notice of his comments or further moves in the US regulator? A lot of analysts are getting cautious in their forecast of the rate hike in March, expressing doubts about a rate increase by 50 basis points at a time. On the plus side, the unemployment rate in the US holds low at about 4%. On the minus side, consumer inflation has accelerated to the strongest level in the last 40 years. On top of that, the geopolitical situation requires a well-rebounded decision from the US Central Bank. In the meantime, the USD CAD pays under the influence of mixed forces. The Canadian dollar finds support from oil prices as a commodity currency. Currently, crude oil is developing a stunning rally because of risks of limited oil supplies from Russia. Another factor is that energy giants such as Shell, Exxon, and BP are abandoning the Russian market. Crude oil is now trading at $110 a barrel. Nevertheless, yesterday the firm Greenback outlines high oil prices in the USD CAD pair. Today the currency pair slipped a bit despite the strong US dollar, trading at nearly 1.2694. The pair is expected to trade in the corridor between 1.2600 and 1.2800. When it comes to the crypto market, negative news is setting the tone. Investors are seeking shelter amid global risk aversion. Remarkably, Bitcoin is immune to the risk of mood. It spiked on the back of geopolitical uncertainty. On Tuesday, the flagship crypto jumped to $44,650 and retreated a bit. The US dollar is taking the lead as a safe haven asset. Hence, the digital gold has to give in. Now, Bitcoin is trading in a tight range between 43,743 and 44,544. The chart looks like a sideways consolidation. The main digital token closed February with a 12.2% gain following a 16.7% slump in January. Such a strong resilience is a positive sign for the crypto market. The information background lacks positive news. The US stock market is poised to rebound, but all bullish attempts have been derailed by the hostilities in Ukraine. Global markets are longing for at least a ceasefire. Once the varying sides reach any agreement, financial markets will revive. Take care and see you tomorrow.